Hello, everybody. It's wonderful to be here at the Investing Accelerator Summit 2024. This is the first time I'm presenting live, and I'm very happy about it. The last time I presented online, and it's much better to be presenting with everybody in the audience. So, as was mentioned, I am the fund manager and managing partner at DoorDarshi India Fund. Before I start, a few quick disclaimers. So whatever I'm presenting is obviously for the participants of this conference. So I would appreciate that if you are sharing something, especially our returns and so on, which I will talk about, you should first ask us before sharing. Whatever information we are sharing has a lot of forward-looking statements in there, and please don't put too much reliance on them because they are forward-looking. Nobody really knows. The security that I'm going to talk about today is something that we own in our portfolio, and therefore I would suggest that we are clearly biased. So this is not a recommendation, but just how we think when we analyze a particular company. And we are not trying to sell anything here because anyway, the fund focuses on non-resident investors. So most of the investors here are residents. So we are not trying to sell anything here. I want to make that clear. So a little bit about the fund. DoorDarshi India Fund is a fund that was started in April of 2021. It's a US domiciled hedge fund which focuses on investing in Indian equities. We have delivered since we started in April 2021 till end of 2023. We have delivered a 32% dollar CAGR. This is after fees and expenses, right? And compared to what we see with S&P 500, which is one of the benchmarks that we use, which is 9%, and MSCI India, which is around 11%. So I think the message is the approach that we use, we feel works very well for us. And these are audited returns. So I've not shown the 2024 returns because we are not yet audited for that. So $100 invested in April 21 became $220 by the end of 2023 versus between 120 to 140 for S&P 500, MSCI India, and Nifty 50 in dollar terms. Everything is in dollar terms. A little bit more about myself. I think it was covered, but just want to give you a few additional tidbits about myself. So apart from running the fund, I'm also on SumZero, where I'm a top-ranked analyst. And before I started the fund, I actually got a few questions early on about, listen, I want to start a fund. What should I do? And one of my recommendations is, if you want to start a fund, even if you want to manage your own money, I would recommend that you first start tracking your own performance and build a track record that gives you the confidence that you are really doing well. So before starting the fund from 2014 to 2020, I was investing in my personal capacity, and I got those returns audited by one of the auditing firms out there, and it has delivered in that period 26% CAGR in dollar terms. And this is assuming that my personal portfolio was paying the same fee structure that my fund is currently paying, so that we can do a like for like. So effectively what I'm saying is, again, this approach works, and I would recommend that highly to everybody else. The rest I will skip because it has been already covered. Okay, so I think let's jump into the idea for today. And again, this is an idea that we have in our portfolio. We are not recommending it to you, but we would say if you were to look at it, do deep analysis on it. The idea that I'm going to talk about is Jammu Kashmir Bank. Full disclosure, we talked about in 2018. It did not work out well for us. So this is the second time. Let's see how it works out this time. Okay, so as of Friday last week, the stock was around 109 rupees, which is the market cap of around 120 billion rupees. If I look at that particular market cap, the valuation is price to book of around 1 times and price to earnings of around 7 times. If you look at the asset quality, the gross non-performing assets is around 3.9%, net non-performing assets 0.8%. Reasonable capital adequacy with a 15.1 capital adequacy, tier 1 12.8, return on capital reasonable, return on equity 18%, return on assets 1.2%. Management, so a new management came in December of 2021, which is Baldev Prakash, and that is one of the things that has triggered in our mind why the idea is interesting. The bank is primarily owned by Union Territory of Jammu and Kashmir and Ladakh, and it has decent liquidity. So one can possibly look at it if you are interested without really necessarily moving the markets. A few additional things. It was incorporated in 1938. it has a dominant presence in the Union Territory of Jammu and Kashmir, right? So if you look at just the loans outstanding, it has a 58% market share in Jammu Kashmir in terms of the loans outstanding. And in terms of the deposits market share is 63%. So you can clearly see the dominance that the bank has in Jammu and Kashmir. It has a strong deposit franchise, especially in a world today where everybody is fighting for deposits and there's not enough deposits to go around. The bank has, as of the end of financial year 24, a 50.5% CASA ratio, and the cost of deposit is around 4.57%. And the important thing is that it has still a low credit to deposit ratio of 70% in financial year 24. The other important point, it is a banker to Jammu and Kashmir government and therefore benefits from some of the policies of the government. For example, all the salaries that the Jammu and Kashmir employees get go into the bank, which allow it to have a higher CASA ratio. It also has, when it gives out the unsecured loans to the Jammu and Kashmir employees, they always, in case there is a delinquency by these employees, the salary is automatically deducted from these employees' salary, and therefore the bank has pretty good delinquency on these unsecured loans to Jammu and Kashmir government employees. I'm just going to run through a few quick slides now in terms of talking about the business. So if you look at how the credit has grown, so credit has grown at around 13%, while deposits have grown at around 11%. And everything that I'm presenting is from December or from Q4 22, which is when Baldev Prakash became the CEO, right? So if you look at it, the credit deposit ratio, which used to be in the 60s, has now become 72%. And that is one trigger that we see with the bank, that they will be able to use their deposit in a better manner as they go ahead. The second thing is look at the margins. So obviously what has happened in the industry is that the cost of deposit has gone up, and that is the case even for Jammu Kashmir Bank. But at the same time, they have been able to increase the yield on advances, and therefore the NIM, the net interest margin, has been pretty consistent across those quarters. If you look at the income, what you will notice is that income has grown at almost 13% CAGR from Q4 22, while operating expenses has actually come down, and so has employee expenses. And that is really where the operating leverage is playing out, because if your income grows, your expenses actually degrow, which is amazing, is why the cost to income ratio has come down, and you will see how that impacts the profitability in a little bit. But the next one is asset quality. So typically most banks suffered massively during COVID, and in this particular case, even pre-COVID, because the credit policies were really pathetic earlier. But now you can see that the gross non-performing assets have come down from 9% to 3.9%, and net NPA is 0.8%. And the other big portion was the standard restructured assets, and they have been able to reduce that also quite dramatically in the last few years. Capital adequacy, I did talk about it a little bit, but when Baldev Prakash became the CEO, bank did not have enough capital, and so it had to dilute itself multiple times, and therefore the number of shares have gone up from around 95 crores to around 110 crores. But now between both the capital adequacy and the CET1, it's in a much better situation. And so I think at this point, we don't see immediate dilution in terms of the share count. Now let's look at the profitability, how all the numbers that I've given you translates into profitability. What is amazing is the pre-provision operating profit has grown 9x in the last 9 quarters, right? And if you look at the provisions in those 9 quarters, the cumulative provisions are less than zero. Effectively, the bank has recovered more than what it has to provide for. And this is when the asset quality has improved quite dramatically, right? And despite the dilution, the earnings per share has grown 4 times in the same period. In general, you see a seesaw pattern, and that is because Q4 numbers are the highest in a year due to seasonality. Okay, so what is our thesis? I've given you a lot of data points. Let's talk about why I feel this has some potential. One is we feel that the high CASA ratio reduces the cost of deposit. And given that at this point, almost all the banks are struggling to have deposits, that is one big advantage that the bank has, that it has enough deposits and the cost of that deposit is not that high. The second huge advantage that it has is that it is a banker to the Jammu and Kashmir government. And because it is a banker, it's a sustainable moat. And how it benefits, I talked about it a little bit, but I will sort of reiterate. Because Jammu and Kashmir employee salary gets deposited in the bank, it continues to have very high CASA ratio, and the cost of deposit is not that high. And then the second very important thing is, in Jammu and Kashmir, it earns a much higher yield on advances as compared to in the rest of India. And one of the reasons why it earns a much higher yield on advances is because it gives out unsecured loans to the Jammu and Kashmir government employees. And those employees, because the salary is coming into the bank account, in case they don't pay the loan, the bank has a mandate from the government to automatically deduct their salary. So effectively, they have much, much lower delinquency in these unsecured loans, which is fantastic. I think the third element is that management under Baldev Prakash has brought a lot of discipline in terms of the credit underwriting, as well as enable the bank to start growing much faster. You saw earlier some of the numbers, but the key difference that has come since he took over is in terms of the credit policies. I mean, I have been tracking this bank since 2015, and in that period, really the credit policies were quite bad. Now, what bank has done, and I will talk about it in subsequent slides, but what bank has now done is that it has taken advantage of the market it has in Jammu and Kashmir and tried to make much more higher yields there in a manner that it does not risk its balance sheet. Also, Baldev Prakash has brought in a lot of digitization, and as you saw, it has reduced the operating expenses and employee expenses, which has brought in the cost to income ratio down. And finally, I think it's very important to realize that Jammu and Kashmir economy is improving. It has done much better under the as part of the union territory, and so that high growth rate will allow the bank to be able to deliver more credit and possibly grow better. So let's look at each of these points. CASA advantage. So here is a slide which shows the cost of deposit, which is the vertical line, and you will see that the cost of deposit have gone up from around 3.75% to around 4.5% or thereabouts. And this has happened because the CASA ratio has come down. CASA ratio has come down for the whole industry, and so I think that's fine, but still the cost of deposit is not that high, and the CASA ratio is around 50%. So, and if you look at in terms of the J&K advantage, what you will notice is that the CASA in Jammu and Kashmir is more than 50%. It's around 53, 54%, or maybe even more higher, 55%, versus CASA in rest of India is less than 40%. So you can see why or how the advantage that it has in Jammu and Kashmir is reflected in the numbers in terms of the CASA ratio that we are seeing for the bank. The second thing, as I mentioned, I did refer to it a few times, which is for the unsecured loans that it gives out to people, to the employees of Jammu and Kashmir government, you can see the delinquency ratio is consistently below 1%. It's somewhere between 0.5 to 1%, right? And that is compared or delinquency in terms of GNPA. And the GNPA overall of the book is around 3% or 4%, 3 to 4%, right? So you can see that for the unsecured personal loans, because of the Jammu and Kashmir government, Jammu and Kashmir government security in terms of the salary, they are able to have much lower GNPAs. And the third thing is that as the government does a lot of initiatives in Jammu and Kashmir, the bank will benefit because it is a banker to the government. Okay, the management advantage, I think, is a very important point in my mind, because anytime you're looking at financials, you have to look at the management. And if you do not have confidence in the management, I don't think financial thesis can continue. So Baldev Prakash, as I said, became the CEO on 30th December 2021. Prior to that, he was in SBI for all of his career. So he has been well trained in State Bank of India. And when he was assigned this new appointment, he was the Chief General Manager at State Bank of India, and he was covering digital and transaction banking at State Bank of India. So because of that, he has a lot of understanding of how technology can help the bank, and we'll see what he has done about it. The second thing that he did is bring out a much better credit underwriting culture, right? So I talked about it, that in past where the bank went bad is giving out loans in the rest of India where it had no understanding of the credit that it was giving. But now what under Baldev Prakash, what they are doing increasingly is in rest of India, they are giving out secured loans, which are typically home loans, and also giving out loans to corporates in terms of highly rated corporates like PSU banks and very high rated corporates. So that ensures that the rest of India book will have much lower delinquency. And in Jammu and Kashmir, where they have higher yields, they're focusing on giving out retail loans. So they are focusing on the retail, agri, and the MSME sector, and that, because of the diversification, gives them that advantage. He, as I said, has been able to turn around the asset quality quite dramatically. We saw the numbers, and I'm just reiterating it here. GNPA coming down dramatically in the last 2 years, and net NPA coming down, and cumulative provision cost being negative. The one thing I did not talk about too much so far is the improved efficiency. I think what Baldev Prakash has done is he has taken on and brought in a lot of technology into the bank. If there was one big issue with the bank, they did not have a good understanding of the technology. Many times the numbers will not be correct numbers, in fact, and that was a ridiculous state of affairs, and that has changed dramatically. So now they have the latest software, the CBS, the central banking system or core banking system that they have. That has changed dramatically, and the cost to income ratio has come down from 76% to 62% because of the technology that they're using. The employee count in this whole period has actually come down from 13,100 to 12,400. And that has happened because the employees are able to do more because of the technology. And what is also happening is that the employees, the higher and more expensive employees, are retiring from the bank, and therefore the cost of the new employees are much lower, and that is also enabling the bank. And they are also able to utilize the deposits in a better manner, as we saw with the credit to deposit ratio, which has come down or which has gone up from 61% to 70%. So all of this has actually translated into very good capital return on capital numbers. You can see here the return on equity has dramatically jumped up, and so has the return on assets. We think it is among the best in the industry, but of course it will have that seesaw pattern because Q1 is the lowest and Q4 is always the highest in the industry. The J&K economy advantage is another important factor. I did talk about it, but what is expected is that the gross state domestic of J&K is going to double. That is what is expected, at least between financial year 24 and 28. And there are various different factors. Given the paucity of time, I'm not going to talk about that. But it is important to note that this will drive a lot of new credit opportunities in the bank. And given that they have a higher yield in Jammu and Kashmir, that will translate into much higher growth opportunities for the bank. So let's talk about valuations. As I said, bank is currently trading at 7 times price to earnings, 1 times price to book. The profit after tax in financial year 24 was 1767 crores, or around 16.8 per share. Now, what is our expectations? Let's talk about that a little bit. So management has guided for around 4,000 crores of earnings or profit after tax in financial year 28 with a 20% ROE. Now, it is important to note that when Baldev Prakash came in and he gave the guidance for 23 and 24, nobody believed him, including myself, because the guidance was just so far out of what the bank was doing. It is very, very impressive that he has been able to achieve those guidance. And therefore, there is, while still there is skepticism about this particular guidance that he has given, but it remains, I think I feel a little bit more confident saying that maybe he will be able to. The bank has a strong return on assets and return on equity, which hopefully will sustain the capital that it needs for this high growth. We are assuming in our calculation that he will have a 13% dilution between here and financial year 28. So the share count will go up from 110 crores to 125 crores. So effectively at 4,000 crores, it will be a 32 rupees per share of earnings in financial year 28, and assigning a very low multiple of 10 times. Frankly, if a bank were to do a 20% ROE, which I think is quite possible given the advantages, we can have almost a 3x from here in the next 4 years. So it is 4 years, it's long term, but you can think of it a little shorter term if that's what you want, and you can still have a pretty reasonable return from here on. So what is the risk? I think it's important to talk about the risk. So there is an election that is scheduled in Jammu and Kashmir this month, or in September and October. That election may impact how the bank performs, because right now the government has given a lot of freedom. What if the new government does not give it the freedom? The second thing is the Jammu and Kashmir region has multiple bouts of terrorism, natural disaster, and so on. I don't know if that were to repeat, then the whole thesis becomes invalid. Third is that the CEO term is going to end in December 2024. We expect him to get another term. We'll see if that plays out. There is more competition in Jammu and Kashmir, so we'll see if that impacts what they have. And lastly, the importance of Jammu and Kashmir Bank as a banker to the government, and if that reduces, that is a risk. So thank you very much. I know I've used my time, and here are my contact details if you have any questions.